Hi, everyone. Welcome to Synergy Traders number 33 on TimingResearch.com with the theme of commodities and cannabis. Synergy Traders is a partnership between myself, David Kosmeter of TimingResearch.com, and Anka Metcalf of TradeOutLoud.com. So for this event, we have arranged for another 16 awesome presentations for you. And Norman Hallett will be up first, and I'll let him get started in a minute here. And but first, disclaimer, just remember that all trading involves risk and is not right for everyone. Please be sure to consult your financial advisor and make sure that the trading is right for you. Past performance does not indicate future results, and this is for informational purposes only. And you can see the full disclaimer at TimingResearch.com/policies. And now I'm going to go ahead and turn it over to Norman.
That's the smart thing to do, David. Thank you. Thanks, unless you want to continue. Thanks for having me. Thanks, everybody, for showing up today. The early birds. I find myself kicking these events off. I really like this positioning. I get to see who's ahead of me. There's some really good presentations here. So, stick around. The best thing to do is kind of view the list and see which ones you want to take a look at and make a schedule for. And they've got all day tomorrow. In any event, I've been trading commodities for, since I stepped into the business in 1979, believe it or not. I can't believe it. But, and I had my ups and downs in the beginning because commodities, the thing about, I've always liked the futures market. I guess you can include options in commodities because they are commodity options. But the leveraged nature of commodities, of futures contracts is a double-edged sword, of course. You can do very well if you're right, and you can get hurt very quickly if you're wrong. And there are a lot of mechanical things that you need to do and practice and sim before you ever attempt to trade the futures contract. But I always found futures contracts very clean. In other words, if you buy gold at $1,700 and it moves to 1701, you're controlling 100 ounces. You've just made $100 if you offset your contract. If you bought it at 1700 and it moves to 1699 and you get out, you've just lost $100 minus commission. When I first started in 1979, commissions was $100 per round turn. Now it's about $2 per round turn. So it's not insignificant, kind of is, but if you're a scalp type trader and getting in and out a lot, that even those dollars can add up. If you hold your positions, if you trade 4 or 5 contracts a day as a day trader in commodities, then you're going to find yourself almost ignoring the commission. So keep an eye on commission, but let it be known that commodities are a great way to speculate, but you need to do it the right way. And I'm going to emphasize some of those things today. I also, when I heard that David was doing this, the idea of inflation came up in my mind, and I want to pass that theme on to you toward the middle of this presentation, because I want to show you what I watch. Listen, inflation can be a terrific thing if you're if you're long in the right markets at the right time. And I'm going to show you the markets that I watch as far as inflation is concerned, and I'm going to show you how I'm going to watch those markets and watch for the triggers. And I'll use a specific trigger. LG is a simple trading plan we call loaded gun. It's been my primary way of trading the markets, whether it's stocks, the Forex traders are using or whatever. LG, loaded gun, works with any market, but it has all of the elements that you need to stay as safe as you can while trading futures and the other markets that I mentioned. But we're focusing today on futures. But everything I say applies to other markets if you happen to be playing in those markets also. I'm the founder of the Disciplined Trader, where I am concerned with traders' well-being when it comes to their mental and emotional conditioning to trade. That's the area where traders screw up. and that's that's the majority of the reasons why 90% of traders are unsuccessful in their trading. I've proven it for you in various studies around the world and other presentations. But unless you take a mind for the mental and emotional capabilities that you have and learning how to hone those, you likely won't get very far. And if you do, you're lucky, and thank God. The simple trading plans is something that I instituted about 6 years ago, which Loaded Gun is the premier simple trading plan, and I'm going to delve into that for you today. I want to warn you: don't try to trade Loaded Gun based on just the things I'm telling you, because I'm not, I can't give you everything, but I'm going to give you enough so that you understand the power of how to exercise all the important things that you're going to need to be successful in trading. I'm going to apply that to what I see in the inflationary realm. This is about me. When I got to 40 years, I stopped talking about my experience because it makes me sound too old, but I can still bench press 225 pounds, 3 sets of 8. So I still have most of my strength from a kid, but age is, as you know, if you take care of yourself, it's not a factor in having a terrific life. And I've, thank God, have had good ones. I've had a good life, continue to have a good life. And a lot of that is due to my experiences that I'm going to talk to you about in my trading. I've written several books. These are the ones that are still alive on Facebook, on Amazon. How to Design and Construct an Effective Trading Plan is something that delves into the mental and emotional first and why that's important, and then delves into creating trading plans that honor that and make it easier to follow. And that's why I'm into simplicity. This More Profits, Less Stress is was really a video that was produced by the Expo people, the live trading expos where they recorded me for an hour and they sell that. But here's another book that I wrote called The Inspirational Quotes. It's more of a restroom book or a coffee table book or right on your desk book. When you need an inspiration, you open a book up and it gives you kind of quotes from a lot of my 4-minute drills, which I've been known for over the years. In any event, I started with Payne Webber. Well, actually, I started with an international trading group, which was the largest option firm in the country back in the 80s. And Payne Webber bought me off, and I was a commodity specialist for Payne Webber, where I learned a lot about those two areas. I managed traders who were responsible for being successful with other people's money. And I learned from that experience that simple is good. And everything I do now is based on what I've seen work over the years. And that's why I really want you to listen to what I'm talking about. If you never see me again, just think about keeping things simple, okay? The Hallett Group and Hallett Commodities were kind of related firms. I named them after myself. I was headstrong at that period of time in my life. I was a commodity trading advisor managing millions for people with money with 250,000 or more through my own introducing broker, cleared that through Hallett Commodities. And that was fun and gained a lot of pressure, but it was very, very fruitful for me. And until I realized that, my wife said, it's time for us to really get out there and really promote the idea of the mental and emotional capabilities that people have and the fact that they're not exercising them. So the Disciplined Trader is really a project that started 20 years ago. My wife is the creative director. She uses everything from subconscious training, meditations, to what they call EFT, emotional freedom technique. We work one-on-one with traders on an emotional and mental standpoint. That's a big part of our business. So if you're interested in that, just go to the site, thedisciplinedtrader.com, and find the contact there and let me know you're interested. I'll give you some detail on that. But today, let's talk about trading futures. It involves leverage. So you need what I consider the 4 secrets of consistently profitable trading plan. Okay. The first is a frequent, reliable entry trigger. Most traders want to trade. I mean, if you have fear of getting into trades, that's an issue that you need to take care of. But once you understand, once you're not afraid to risk because you have your, I'm going to throw up this second, your tight risk parameters in line, you need the more frequent you can make your opportunities, the better. But you need it has to be a reliable trigger. It just can't be any trigger. So if you have a frequent, reliable trigger, you're going to be way ahead of the game because you're going to satisfy your urge to want to get in. Because if you only have a trigger that works, and I'm talking now about day traders, people where you're out at the end of the day. I'm including scalpers. I'm including swing traders. I'm not including those that hold overnight in this conversation, although much of it, of course, applies, including tight risk parameters. But a frequent I mean, if you're hanging around for hours waiting for a signal, that may be good for most people but most of the personality types that I come across are personality types that want the action. They want the idea, they want the involvement. I mean, there's an old expression, I'd rather be out of a trade wishing I was in than in a trade wishing I was out. And there's some big credibility to that. But again, reliable entry is just as important as the frequent. But if you can have both, and I'm going to show you one, then I think you're way ahead of the game. So, and then you need tight risk parameters. This is probably the most important element of successful trading, keeping your risk low, not being sucked into moving your stops around or believing in some fantasy that because you wish for something, it's going to happen, or because they tell you on CNBC that something's going to happen. When you enter a trade, you should know exactly what your risk parameters are. And as a market matures in your favor, you need to preserve that risk as you go. Those are the main that's the idea of risk parameter. And I'm not just talking about the initial risk. I'm talking about as your trade evolves in a positive way to at least prevent a loss in that trade by moving to break even at not only at points that are satisfactory to the chart. I mean, you don't want to move to break even just because you don't want to lose. But if you've extended to a certain degree, and I'm going to show you a little bit about that, you're going to be able to persevere in the long term with trading and let some of those things really run for you. I'm into the scalp runner approach. And when I say runner, I'm talking about a swing trade that actually starts to move. Scalpers have some very positive features by being a scalper. Of course, by being in a very short period of time, your risk is very small. But you know, you're not letting all that could be in many cases, which can affect you mentally. Runners, those that let a position run, that can be very good. But of course, when the market comes back and a winner becomes a loser, that doesn't feel real good. So there's positives and negatives. I'm going to give you a couple of those in a second. And then there's nuances, which is a process that I've come up with that I believe that all the people that work with us really seem to love. And that's the idea of doing a few things that in your trading that custom fit you as a trader. My accountant, who is a pretty successful trader, he trades differently than I do. And I gave him a couple of tips on how he can fit his trading plan. He was struggling for years, how to do a couple of things, nuances to his trading plan, not changing it, but running it a little bit differently to fit his personality type. And all of a sudden things really change. So nuances are things that optional things that can help to customize the trading plan for you as a trader. I just think I've learned over the years that that's very, very important. Okay, so let's look at these individually. This is the trigger that I want to talk about as a frequent, reliable trigger. And I'm going to show it to you in action in a second. This is the first. This could be any time frame. Let's talk about the 10-minute time frame. This right here is a 10 minutes of trading. Let's look at this one first, because if you don't know what a candle is real quickly, the body of the candle, this green, the fact that it's green means that the close was above the open. The market opened here at the beginning of the body. The price is this axis here. Time is this axis. So we're looking at a market that during this 10-minute period opened here and closed here. Okay, That's what the candlestick creators, the Japanese candlestick creators, the farmers 400 years ago, believed were the most important part of this time period, when the two decisions that are most important are the open and the close. And when the market moves strongly like this in a one direction, that's significant in analysis. These wicks here are prices that occur above and below that open and close range. Okay, and most candle analysis all but ignores those, and I do in this exercise, unless it's a very long wick. There are exceptions, but in general, I'm most concerned with the body. Here's a body, same 10-minute period, but very little action. And the open and close were almost the same price. The fact that it's red means that the opening price was up here, and we closed in that 10-minute period below the opening price. Okay, so that's why it's red. But the red and green in this trigger is I don't look at it with any importance. The fact that we have a very short range, this tells me that there was indecision in this 10-minute period. The fact that we opened and closed literally at near the same price, and that indecision, I'll allow a little bit of room. This is called a spinner. If the body's maybe twice or three times the size, still a spinner. If it's one line where the open and close at the same price, that's a doji. That's absolute indecision, and most candlestick educators will tell you that that is a signal for a change in direction, a possible change in direction. My experience is that it's really a 50-50 deal at that point, but it's a pause to decide, really, is what it is. And then you have that when you go from indecision to an extended candle like this, it shows a definite decision through, and in this example, I'm going to use the 8-bar exponential moving average. If it crosses the 8-bar exponential moving average, that is the buy trigger. Okay, you're going to buy here. Okay, you either buy at the very end of this candle or the very beginning of the next candle. You really want to wait till this closes. I usually have my finger on the candle going 59.60. When it closes, I just buy it at the market. And so you buy 2 here, and you put your stop underneath a tick below. Some people like 2 or 3 ticks below because they have a sense about it. For some, we'll go into, but it's okay. 1 or 2, 3 ticks, that's okay. But you want to defend yourself below the structure here, below the trigger. So when you measure this, when you buy your 2 positions here and you measure your loss, you're going to assume you're going to take the loss. And if you're going to take that loss, is that greater than 2% of the value of my account? If it is, you cannot take this trade. So that's something that we'll cover in the next slide. But this is the trigger. Okay, let's take a look at it in action. All right, and I'm going to talk about tight risk parameters here. If you look here is it's the opposite of what we saw. You saw the bullish version, which looks like this. Okay, I'm giving you here the bearish version, where you have a doji, in this case, a indecision bar, followed by a strong move through the 8-bar exponential moving average. This is a sell of 2 positions. Okay, and then you put your stop here. As the market moves lower, as long as we're staying on the correct side of the 8-bar, you're going to follow this down. Okay, you're going to follow. When we cross it with a couple of closes, let's call it for this exercise 2 closes above the 8-bar exponential moving average, that's your simple exit. There are much more sophisticated exits that are still simple that we talk about in the course, but let's just continue here. So we would continue in here. We would continue here because this is one close above. I don't know if this looks like a close below. This is a close above. This is a close below. Again, we're only concerned with the closes here. We have one. Here's another above. Here's another close below. Now, it's funny about these trades are happening at 1 in the morning here. Okay, so this is a silver chart. Okay, this is a silver chart. And this is a if you weren't in here, here's another entrance signal here. Okay, so we have a signal to go south here. Again, this may be a place to add a position, but we talk about that in another discussion. The idea is I want you to see the trigger. Lack of decision, strong decision making through the 8-bar. Stop would be up here. Okay, and we continue to move. One close above, two closes above, we're out here. Okay, in the simple version of this. And there are more, less, they're still simple, but there are alternatives that would have kept you in this trade even more, but that's, again, a different discussion. I just want to show you the value of the trigger, okay? And here, this is interesting. Well, here's another trigger right here, right? Here's another trigger here that would have worked out in our favor, and I will tell you why in another lesson, but it didn't have much angle here. But look at this. Okay, here's a reversal signal. Whoops, let's go back. Here's a reversal signal. And although this is a beautiful signal, this is a hangman with this very long tail. A very long tail is something, I'm sorry about that. The very long tail is indicative of a give up, especially toward the bottom of a run. You combine that with the move toward the with the extension here, you're talking about a very solid signal here. The problem with this signal is that you've got to measure the risk down below this. So this would not be appropriate for a number of traders. If you had a big account, then you can take on a small position on here and still fit that 2%. But look what happened. I mean, just a big extension. We talk about when the market pulls too far away from the 8. That's another discussion. But here's another signal that lost. Okay, this is a signal that we went short here, followed by one that lost here, and that one lost too. So this is a signal that's frequent, and it can lead to these kinds of runs, as you can see. And the more you inspect this, the more you can see it's going to lead to pretty much an equal number of runs and short runs like this, and false signals like this. As long as you keep your loss here and loss here, will be way offset by what you're looking at here and here. So the idea is that every trigger doesn't always work out, and so that you, again, tight risk parameter. That's the important part here. And I show you this because not every signal is going to work. Okay. So you got to have a tight risk parameter. All right, there's 3 types of trading: scalping, swing trading, position trading. And for this this presentation here, we're going to talk about scalping and swing trading. Okay, are you with me here? Can somebody give me something in the chat? Give me a hey you, and I'll just to know that you're with me. Rocco, are you there? Come on. All right, yeah, all right, Robbie, here we go. We're going to talk about scalping and swing trading because I want to be very clear about what I have found that really works and what has made Loaded Gun probably the best trading plan that I've ever put together in 30 years of doing it. First of all, let's discuss scalping. Scalping disadvantage. I'm going to go quickly through this. We've got generally small prescribed losses. You've got that's the good thing. And traders with limited time to trade can complete trades here. We coach a fellow who has Todd, who trades an hour and a half a day because he's a major sales trainer for a very large company, and he trades an hour and a half before he goes into the office, and he does scalping, so it works for him. Okay. This disadvantage is that you, by prescription, you have small wins, and chop can really hurt you in scalping because generally you're looking at 1.5 to 1 or gain to loss ratio. Very seldom do you see 2 and 3 to 1 in scalping. You're just looking for a few ticks. That can get you can get hurt there. If you can get chewed up in chop, and those who scalp know what I'm talking about. There's a psychological challenge here where you say, I could have had a much bigger profit if I had stayed in. The conclusion, though, the market goes, you take a small profit, the market continues to go. And that's a psychologically, you wish you stayed in. To succeed, you need a plan with a high percentage of winning trades. Okay, that's about scalping. I know I'm going through this quickly, but I want to get to the charts. Swing trading, opportunity for larger gains, okay, which is really what we love in trading, and trades with limited, and also traders with limited time can complete trades, because swing trades can take 5-10 minutes, can take two minutes, it can take 20 minutes, 30 minutes. Something, if you're in a trade, it could be an hour. So disadvantages, you can give back. The market goes up, you got to give some breath, you got to give some breathing room to swing trading. So you got to allow for a setback, but you really never know whether that setback is a change in direction or just a pause for the cause. So you can give back a large portion of what you gained. And there's a psychological challenge there, the opposite of the scalper. Boy, if I had just taken that short profit when they gave it to me, I wouldn't have had to go through all this time and space and wind up with nothing. So the conclusion is you can afford to have a lower percentage of winning because you are giving yourself a chance to make more on each trade, but you still have to have hopefully more winners than losers. It makes life a lot easier. I've seen some trading plans that actually have an equal or less winners than losers, but they keep that loss very tight. So, but it's much easier to run and much less pounding on your psyche if you can keep the winners ahead of the losers. But you got to remember the psychological challenge. But the loaded gun simple trading plan that I'm showing you here benefits from both scalp and swing trading. Small prescribed losses takes gains frequently, the small gains, but also gives you the opportunity. It's a 2-position minimum trading plan, and it avoids account draining in the choppy market. We can go through that too. But here's the Scalp Runner, and I want to spend about 2 minutes on this at least. This is most of my most successful trading plans, including this one, include this kind of notion where you're employing both the scalp and runner, and by doing that, you're not saying I wish I would have let it run, and you're not saying why didn't I take the low-hanging fruit. You're doing both, and the advent of mini contracts, accounts even as small as $5,000 and $10,000 can really, the micro minis can take advantage of this. Okay, here is this is the same chart I showed you before. Here's the trigger. You're selling to here. Okay, what I like you to do is to measure the body. What I found that the extension body tends to repeat itself. If it's going to be a good move, it's going to actualize. Okay, so you're selling to here, minimum of 2. You're putting your stop above the formation, a tick or 2, and you're putting your limit buy-in at an equal distance. So you're measuring this and extending it from the close, and you're putting your limit buy-in there. Now there are variations to this in certain markets, and I can get to that some other time. But in general, you're taking your scalp at an equal distance of this move. Okay, and when you do that, you then move your stop on the remaining position to break even. So if we had done that here, we would have taken our first scalp here, and we would have written this down. As we said before, you may have added positions here, of which you would have done the same thing here. And you would have, well, it's a little complicated, not complicated, but there is a nuance where we move our stop when we see another trigger like this. But suffice it to say, you can see that you take your trigger and you let the other one expand. This makes a very easy ride in your head, okay? Because you've taken the trigger. Of course, when you're in a trade like this, it's a pretty easy ride. This is a move right here where you'd have to find a micro probably contract in a $10,000 contract to see to be able to take on 2 positions here. It's against the double bottom, really like the position. So you buy 2 here, put your stop down here, you get out of your first position in the equal distance to this body, and then you move your stop on the remaining position or positions to break even, and then you ride it up. That's all I'm going to explain about plan right now, but it's the simplicity that I'm talking about extends to some of the other alternatives. Here, you're looking at, you would have been out of this trade right in, actually, the truth is that if you look for two closes below, you have one close below here. No, here's a close below. You need two consecutive closes, one close below. You would have literally been in this trade all the way to here, and you would have been out at this point right here. But you would have been out before that and not wasted this time on another way that we get out of and take profits on trades. In any event, the idea is that I think I've shown you the importance. I'm going to show you those in real charts right here. Let's get to, because we're about half our time is over. Every trader is different, and there's a danger in one size fits all type traders. Trading plans. That's why so many of the trading plans you've probably worked with haven't fit you, and therefore you haven't had success. Different personality types need different plans, and that's why we have these nuances that address the psychological factors. I'm going to go through these quickly because I think you've seen enough really to see how simplicity works, and the importance of the concept of nuance to keep you in tune with your trading plan without a lot of brain fighting. Okay, candle saves are when there are ways that you can still stay in a trade. Certain candles are very small, and when you have those two closes on the other side of the 8-bar exponential moving average, there's ways of staying in that add very little risk to the trade, but could keep you in a trade, and it works a lot. So that's a nuance that could fit your personality type. Another combining time frames. For those that are looking for more trades, even than the frequent trigger gives you, I show you how to combine certain time frames or separate certain time frames to expose that trigger in different time frames. Too much risk, that's something that I can't explain right here, but there is a way. You saw that one trade where we're getting in on the bottom. There's a way to get into that trade that can comply with your risk, and I show you how to do that. Multiple positions. There are ways of, I like taking on the majority of my positions, all of my positions, right on the initial trigger. And there are ways to peel that off in a responsible way, but still give you a nice chunk to ride with when you get one of those big runners. And you're going to see a lot of them when you start looking at this, this trigger. What happens when another trigger occurs during a run? I think we saw one of those. I tried to explain a little bit of it, but there are things to do there that not only can preserve what you have, but can add to the power of what you have. Trigger and congestion, you gotta stay out of chop. And so when we see triggers and congestion, there are things that we can do to avoid being chopped up. And there's a concept called undertow that I like to talk about, something I learned over at Payne Weber, and it's really a more conservative view of things, but I think it can help the more aggressive by understanding that the longer term charts, the monthlies and weeklies, supply an undertow to the market. And when you look at other short-term analysis, if you understand where that undertow is, you can adjust your position size to be with the undertow rather than fighting the undertow. Okay, that's all I'll say about it now. But you don't want to go against the undertow with major positions, because you can be pulled under in the market. Let's look at some inflation commodities, okay? Because I want to show you some of the things that I'm looking at. Now I'm kind of turning the page. I'll go back to this and show you a special offer. I have the loaded gun, but I want to discuss a little bit about inflation, because this is an important time for me. I kind of got back into doing more trading than teaching lately, personally, because when you have inflation on the horizon, and I believe it's going to be there, whether it actualizes or not, the thought of inflation will drive the markets. But I do believe there's going to be a certain degree of inflation. You can't be spending all this money with the Biden plan and so on and not have some ramifications as far as diluting the dollar is concerned. So this is gold, and this is where I started in the market. I mentioned 1979. This was January of 1980. I was in the market for about 3 months when this happened. And this is what's kept me in the market, the excitement of watching this happen. It didn't get to $2,400. It actually got to $850 in 1980. But this is adjusted for current dollars. So you can see we're playing in that area again, and but of course this is not adjusted to our dollars. Our dollars would be, I mean, a move similar to this 850. This is what is it, a 3-time move almost. You'd see at least that in that when this happens. So the fact that we're at the same price doesn't mean we are at the same price. This is again adjusted for inflation. But I want to show you here the power of what happens with when inflation comes. And so gold is a market that I always watch. Silver is another market. Now the Hunt brothers caused silver to go to $50, and in today's terms, 120. This is the same period of time. We had another period of time. I guess this was 9/11. But I'm just telling 2000. No, it wasn't 9/11. This was the tech crunch. In any event, you're seeing the power of inflation, and I want to show you that in the current charts. This is sugar is not a lot of people think of it, but those that have experience for years in the markets watch the sugar market. This right here is that same period of time. You can see what happened during inflationary times in sugar. So they used to call it a war commodity. And I'm going to show you some of the other commodities that I watch that I like to trade during inflationary times. But I wanted to kind of show you what's happening here. Right now, we're trading at about $25, again, 25 cents in sugar. I'm going to show you a chart of that right now. So I'm going to switch the sharing of my screen here to TradeStation. Okay, I just want to make sure that you're still with me here. Can somebody give me a hey you? Let's say the 10-minute candle chart used specifically for day trading, swing trading, scalp. Well, you can use this on any time frame. I'm going to show you some dailies here, but I use it on the 5, 10. You can use it on any. A lot of guys use the 60 who are willing to hold it overnight. I like the 5 and 10, and there's been some success. I'm not a 2-minute and 1-minute chart trader, but this works on that too. Can you give me a hey you? I'm still with you. Just somebody in the chat, just so I know you're sticking with me here, and we'll go through some of these inflationary charts, and I want to show you. Okay, there's a kind of a yes here. Okay, I can't, in this particular, I can't be telling you the entire, I'm only giving you the skeletal version of loaded gun. But I want to show you the power of the trigger and so on. So here's sugar, and you can see that it's had a pretty nice run for a while now. So when this happens, this can be a prelude to inflationary thoughts. You can have all your discussions about shortages and so on, but the price is what I look at. And I'm looking here at, you can see we have a trigger here. Now this just poked over. I'm just showing you now the loaded gun trigger in some of these, just to show you how it acts. This looks like it, let's see if it actually poked over. Let's see, the close is 36, and no, so this is not, but this is a trigger here. You have a couple of indecision bars, a few followed by here, so you'd be selling 2 here, stop up here, you get out of your scalp here, and you'd be riding the other down. And 2 closes above in the skeletal version of the exit, of which there are improved exit strategies, but you would be getting out of your second one here because it's the second close on the other side of the 8. Okay, so there's a nice successful trade right here. We're looking here. I don't see any triggers. No triggers here. Still no trigger. Here's a trigger here that did not work. Okay, and when you start to see this action, you stay away from triggers. Okay, so you're seeing double tops, double bottoms. This is a trigger that you wouldn't have taken because you're in a chop. Again, we have certain rules, and so. But I wanted to show you the exercise here is to kind of show you how we work with the loaded gun, but mostly, but also to talk about some of the markets that I watch. Let's take a look at the cotton market, which is another market that this impressed me recently because cotton can be boring, but look at this move from 60. It's almost moved up about 80% in value in a year. This is right here is October of this year is 65 cents. We're at $1.12 right now. There's underlying feelings here, I think, from an inflationary standpoint. Now, here's a trigger on the short side, okay, which would have reversed here and reversed again. You can see how, but this would have led to a nice, this is a nice trigger here that would have kept us in here. I don't see much in there's a trigger that didn't work out. Actually, you would have been out with a very short loss. And there are no real triggers here on the day. But again, I use this. We'll take a look at some shorter term charts in a second. But when you can catch a nice trigger in the day chart, you can get a nice big run like this. So let's keep going. Let's look at soybeans. Soybeans is a market that, as we call it, beans in the teens when we're really bullish on it. And we're still up in that 12 area. It's not teens, I guess 13 is the minimum teen. But you can see how it's holding nicely, really, at this level right here. And I'll talk about looking at the RSI in a different discussion. But you can see this is not a trigger here, but you can see a trigger right here that resulted in a really nice move. Here, again, we got short. This is where you would be taking your profit. You have a nice scalp move here. And if you weren't in this, you had another trigger right here on the long side for the nice move. Nothing going on here. This is not a trigger because we're on the wrong side of the 8 with the hesitation. This is, again, you'd have to watch your risk. These are too big a risk to take. Here's a nice trigger on the short side of which you would have stayed in. There aren't 2 closes here. You would have had your scalp out about 2 weeks later, only to get out of this. Is the second close with a short gain on the second position. Here's this another trigger. Well, here's this trigger. Well, that's not because we're on the wrong side of the 8 here. Here is another trigger right here, which you would have had your scalp on, and then when you came around here, you would have had your break even here with a trigger that didn't work out. So you had a few that did, one that doesn't, and so the idea of taking your scalps is important so that you can. What happens here is that the scalps generally fund the losers, and you walk away with the runners. Okay, so let's again. Here's a market that I watched: the soybeans. It's a food stuff that's worldwide, and when there's worldwide inflation, you'll see this. And the fact that we're hanging on in here at very high prices shows me that we may be ready for another wave up. Copper is it's a controversial whether you believe that copper is an inflationary indicator. I believe that you know, with the roads and bridges coming and the use for copper and the building that goes on in China, this is the reason why copper could be something that we would want to watch. And so you had a scalp trade here. Let's look at a scalp trade here where you took your scalp on an equal distance here. You had a losing trade here. Here's a beautiful trade. And again, you won't be taking all the trades because of other factors. You know, where's the capability of this right here? You got a big risk because this is a big candle, and yet you're really close to the top. Your scalp may not even be enough. But this is the kind that we look for. Okay, the small risk, but follows the rules. But look at this, very nice big trade. Not only gets your short scalp, but you've got a nice looks like a 50-point move in copper right here until you were reversed out, and then you were out of that long trade here. You've got, doesn't see much here. Let's continue on. So that's the copper market. We have the gold, which we talked about. And I kind of drew Fibonacci lines recently because we seem to be holding on to the 61% Fibonacci retracement. So this is another market that you want to watch out for. on the long side because it's a proven entity when you go long. The fact that we've been holding on the oversold side right at the Fibonacci level. This thing, you know, we've had some sad days in it. I mean, look, we've gone all the way from the 2100 high back to 1700 and actually broke that a couple of times, but maintained it. I'd be watching this market very closely. I think there's a lot of potential here. Let's go on to the last market that I want to talk about here, and that is the Bitcoin. Whoops, let's see if I can, whoops, let's get this right. I need to move this because I reduced it instead of expanded it. Okay, let's expand it so that we can take a look at it. This is the Grayscale Bitcoin Trust. The Bitcoin futures market is not really, doesn't really have the volume. In fact, I think one of the smaller exchanges canceled their version of a Bitcoin contract, but this is a trust. Acts like a stock. It's kind of well priced as you can. It's a $25, $30, $45 kind of thing. You can see the action that it's taken up here. You're looking at live quotes here. So you've got a really nice way of playing the Bitcoin market. I just wanted to make sure that you knew about the Grayscale Bitcoin Trust. Symbol is GBTC. It's really mimics all the futures market pricing of the Bitcoin with weights with a greater weight to the current contract. So you can see how it surpassed new highs today, and so did the Bitcoin Trust here. So I wanted to show you that. Okay, I want to give you. I want to show you some shorter term charts, but before I do, I want to show you here my offering so that you can be involved more in the fourth quarter push. This loaded gun simple trading plan, you've got the core loaded gun simple trading plan. That's what you get. I've just started showing you there were videos with all of the rules. All the rules fit on one sheet of paper. Very simple. Okay, you get all the nuances, and then you've got the videos on the nuances. Currently, the 7 that I showed you, we're in the testing stage right now. That these are adjustments that you can make that do not increase risk, but can actually keep you in trades and increase the your take on some of the runners. Okay, we have a private Facebook group. If you're into Facebook, we're there for you. If you hate Facebook, I can show you how to set up an account incognito, but we do have some discussions there. But we also have our monthly get-togethers, okay, which where I update certain things that I'm working on. We share our experiences. It's great. We all have our little boxes on Zoom, and you get the recording if you can't make it. Okay, here's a quote from Alan, who said, your processes are usable by every trader for every trading style to guide each of us in creating our own personalized system. He's talking about those nuances. The tools have helped me increase my profit, win ratio, confidence, and most of all, my job satisfaction. And as a full-time trader, that's been the greatest benefit of them all, the job satisfaction. So he's a real estate developer, but a very successful trader. And he's gone from slightly kind of successful to very nicely successful. And really, we've had a really good time with Alan. Peter, he wasn't sure I read it when he sent me this email, but he's an experienced trader that's now using loaded gun exclusively. He thought his problem was psychological, but in fact, his system just didn't work. So he's using loaded gun right now. And John he wrote me and said, I mentioned that I like to trade Amazon just to show you stock traders, works on Forex stocks. I did just one contract on puts and a put on a bear call spread. I was out of both in a few minutes for $860 profit using loaded gun. He uses the trigger to execute his option plan. I have the EMAs as a dashed line along my other indicators really help me. So he uses loaded gun within another trading plan, which it's so simple you can actually employ it. I use it as it is, and so do some of the other ones we've talked about. I'm giving an unlimited bonus, and I don't think you've ever seen this, David, because I've never done this. I kind of had a thought about it last night while I was lying there. Generally, there is a bonus that I give that if you buy Loaded Gun and give it a try, once you get through the videos, which will take you about 3 hours to get through all the videos, I get on the phone with you one-on-one. It was a one-on-one 30-minute video, for 30-minute coaching session that I offered, but I've decided to expand that because there's a couple of people who want to meet me again. They had further questions. I'm going to give you unlimited one-on-one coaching sessions with me for 3 months. In other words, go through the videos. It's only going to take you a few hours, and you'll see how simple and effective this is on whatever you're trading. And then we'll get together, and I'll find out a little about you on the first call, and I'll find maybe I'll suggest a nuance that could work for your personality type. I mentioned my accountant who's kind of had a trading plan where he needed a lot of hoops to be jumped. It's some great nuances for him. Really showed improved. So I want to learn about you, and then I'll maybe suggest a few nuances and answer any other questions about the trigger. What if one of the two candles are on different sides, and what if, what do I do if you have your own way of looking at things? That's what we kind of work out here. And along the way, I figured, hey, I'll leave myself open for you for 90 days, just so that you have it perfectly. Okay. As soon as you invest, you'll get an email with my calendar, and I'll get to know you. You'd set an appointment. I'll get to know you, find out what you trade, and I'll make sure that you understand the basic rules and the principles of Loaded Gun. Okay, and I'll suggest specific nuances so that Loaded Gun is customized for you. This is really where I have fun, kind of helping to customize it even for you, making it even better than some of the things that I've shown you. So I just want to emphasize the fact that I want to support you personally. Okay, why do I do that? Because really, you're not going to be there every other day. What'll happen more than likely is we'll get that first one out of the way. You'll trade a little, have another question, maybe another. Maybe we'll meet 3 or 4 times for those people who are very particular. But you'll be on your way very quickly with this. But I want to leave it open for as many as you need. I mean, look, some people like more support than others, and I'm okay with that. You're a newer trader. You need more support. I'll help you for 90 days. Okay, and it's all going to take to get you solid on this trading plan. Okay, and I'm going on top of that, you get my personal guarantee. If after having our one-on-one onboarding, that first meeting that we have, as long as you have it within 60 days after you purchase, because I'm leaving the calendars open. There's a limited number of people that I can have buy this at one time, because I'm leaving my calendar open for the one-on-one support. So within the first 60 days, make your first appointment with me, and we'll go through Loaded Gun. If you don't believe after that first meeting with me where I suggest nuances and so on, you don't think it's for you, then I will. If you don't think it's 5 times what you paid, then I'm going to refund your purchase. I'm not going to resell you. I realize that all trading plans are not for everybody, but this is really for most people. We get very, very few people, and most of them are because of illness and things on that order. It has nothing to do with the plan. Okay, so here's the offer. Loaded Gun Simple Trading Plan. Okay, you get all the nuances. You get the private Facebook group. You get the monthly get-togethers, plus the unlimited one-on-one coaching session for 90 days. Okay, and for that, normally if you go, it's a great price. It's already discounted 50% of almost a little over 50% of the value of the Loaded Gun that's explained in the sales page. And you'll see that we sell it now for $14.97, and this is a terrific price. And people are very happy paying that because it's worth much more than that. But I'm going to add the unlimited one-on-one coaching sessions for 90 days. Okay, and so that adds a huge value. If you use the coupon code 4th quarter, this is part of the 4th quarter push that I made last week that a lot of people take advantage of. But I figured if I'm doing this, I'll give you the same advantage. 4th quarter push. That's your one word, no space. Okay, 4th quarter push. You put that in the coupon area, a coupon code, you're going to get $500 off. It's $9.97. You're still going to get all the coaching sessions. You're still going to get everything that you need. This is I don't charge. This is not a yearly access. I'm going to teach you how to do this We're going to teach you how to fish. You're going to go out there and fish, and you're going to have the support, one-on-one coaching sessions, unlimited for 90 days. And here's but I can't, when I do this, I get a wave of people. Again, the calendar, we also coach on the mental and emotional, as I mentioned. There's only so many calendar spots. So I'm going to end this offer at midnight. Okay, so simpletradingplans.com, use the code fourth quarter. Okay, fourth quarter, simpletradingplans.com. You'll come to the offer page, scroll to the bottom. You can kind of read the recap. But we got about 5 minutes left. And I know I'm probably 1 or 2 minutes early. Well, let's take a look at something that you trade, and maybe we can take a look at loaded gun and how it works on what you're trading. Well, give me an idea of what you're trading out there. S&P or the and I can kind of show you how it works on you. I'm going to look at a 10-minute chart just to show. A lot of you are trading a lot of you are trading the, okay, let's do the S&P. A lot of you trading the indexes. Let's look at the 10-minute. Look at here's today's 10-minute chart. And I just want to show you, this was the middle of the night last night, but you look at the signal. Here's a signal right here that did not work out, right? Signal that did not work out, but you had a short risk, which is the way you want to design it. We know that when you take a loss, and you're going to take a loss because you reversed your position. But look, we had a nice scalp here. Again, you're taking a scalp, and we have another runner. You took your profit here because this is a reversal signal, but you took your scalp out here. It looks like it did make it. I'm eyeing this. But you would have been, and if it didn't take your scalp, you would have had a loser here, a very short loser. Okay, you had this nice run here, and then you would have been short here, taking your scalp here, and then break even. So you're taking a lot of scalps along the way. This is not this is a signal right here, which would have been a small loser, and then you had another signal here, a big scalp, a big runner. Look at this. Again, you would have had to measure your risk. Okay, and here's a reversal signal. So you would have taken out your runner here, taken a nice profit, and you would have had 1, 2, 3. We had one below. You would have been out here on your second close below 1, 2, and so you would have been a complete loss, but you had another loss. But look, here's another signal long. Okay, you would have been in this trade all the way to here. So you can see the value of this is crazy. Let's go. Let's take a look at a 5 minute real quick. Here's another signal that isn't covered. A 5 minute. Here's a 5 minute signal. Here's another signal on the long side. You know, so there are even the shorter time. Look at this. Here's the 5 minute right here that would have gotten you into this big run. So telling you, try this out. Okay, simpletradingplans.com. Simpletradingplans.com. Okay, and don't forget the code fourth quarter. Okay, fourth quarter. And for your $500 off, you'll get unlimited coaching session with me, so you know how to run this. Look at this. Here's another right here. Looks like I got about 1 minute left, and so because of that, let's go to something like I've been trading a lot of yen, but let's look at gold, see if that had any action on the 10 minute. On the here's a nice.
Norman, sorry, I gotta
okay.
cut you off.
All right, well, that's good. Simpletradingplans.com. Thank you for having me, David. You know how excited I get.
Thanks, Norman.
Okay, my friend.